Hey everyone, welcome back here to Chip Stock Investor. You may have been wondering where our Nvidia coverage is. It seems like the world has gone crazy over the most recent quarter's earnings report for Nvidia. So, to get the show started, let's talk about the first quarter fiscal year 2024 numbers for Nvidia. Everyone knows some of these numbers by this point, but let's just run through them. The revenue for the most recent quarter was $7.19 billion, gross margin about 64%. Revenue for this quarter was down 13% year over year. And so you may be wondering why this was such a big deal. Let's talk about the outlook for Nvidia and why this is actually what's driving this stock up.
Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support, as subscribing to the channel helps us continue putting out content like this. Well, I guess for starters, let's just say when you tell the market that you have scrounged up an extra $4 billion in revenue for the next quarter, and possibly even more than that for the next 2 quarters after that, investors are going to be quite pleased. So in a nutshell, this was all about the forward guidance for the rest of calendar year 2023 and perhaps some continuation of the growth trend into 2024. But we'll get to that. Suffice to say, though, this was an absolutely epic earnings report unlike we've ever seen. And I'm not sure anyone has ever seen anything quite like this, to put it very simply.
Let's just do a little history here on our portfolio, Nick. I know you've mentioned on the show before that Nvidia is the largest holding in our portfolio. So how exactly did this happen? Like, we're very careful about having a very diverse portfolio. So how did Nvidia get to be at the top of it?
Right. We did trim a couple of months ago, but even after we trimmed, it was still by far the largest position in our portfolio. And it has been for off and on now for several years. And this really, I think, maybe goes back to when I was in high school. I was building a PC and I worked nights and weekends, and I saved up my money to buy this really novel chip called a graphics processing unit so that I could play, at the time, what was high-end video games with my friends online. Saved up my money and bought an Nvidia graphics card to finish my PC build. This was 03, 04. So by today's standards, these are now very primitive chips. But that was my introduction with Nvidia 20 years ago. Have really been a fan of the company since. I can't say that I was bullish on the company right out the gate. I wish I did, but this is really a story of us buying the stock in batches and small batches over the course of many, many years. Nvidia is one of our oldest stocks. And as we have continued to learn more about the business, we have just added. We have added on the dips because it is a highly cyclical business. And at this point, we think one of the largest, if not the largest, basically computing technology research and development organizations, publicly traded research and development organizations on the planet. So it's going to be cyclical. It's going to be tied to breakthroughs in technology like we've seen this year with AI, but really this is not a result of us placing a big giant bet on the stock at some point, at some definitive moment in the past. This is really just us learning more and more about the business over the years and adding whenever we saw an attractive price on the stock. And here we are in end of May 2023.
For those who are not familiar with Nvidia, maybe we can talk a little bit about the company in general. How does this company make money? What chips do they make? Where are these chips being used? And how is this company so profitable?
As I alluded to, this company got its start in the video game industry, specifically for PC, high-end PC graphics. And that has been its bread and butter for decades. But something started to change about 15 years ago. So, video game graphics, high-end video game graphics, take a massive amount of real-time computing. Um, and the GPUs NVIDIA specialize in, it's a type of parallel computing. So they're able to take multiple streams of data and compute it all at once. And CEO Jensen Huang talks a lot about this, that these types of chips could possibly be really good at other things other than video games. So about 15 years ago is really when the company started pouring a lot of development into broadening the use case of its GPUs. But I think what really makes the business special is that they've always known that from their time in video games that to get people to buy the chips, you have to make them very easy to implement off the shelf. So this is also for a very long time now, not a new development like many people believe. This has for a long time also been a software company. Now, as to your question as to how NVIDIA makes money, they make money primarily by selling chips themselves. They oftentimes bundle that software together for free with the chip to make the chip easy to use, easy to implement. And here we are today, 15 years later. Video games are no longer NVIDIA's bread and butter. Now it's data centers and AI, but it's really the same business model. They design very high-end chips that are very, very good at computing massive amounts of information, but they also bundle, oftentimes for free, the software with those chips. So NVIDIA chips, be it for a video game or data center and AI, maybe it's Chat GPT, those chips carry a very high premium because of the software that goes with it. However, it's the total cost of ownership that matters here. Yes, the chip is a premium, but the total cost of ownership is very often the absolute lowest you can get. So that means development of the use case, deployment of the chip, and then the energy efficiency over time and the adaptability of the chip because of the software libraries that are there. Total cost of ownership, or TCO, is very low when compared to NVIDIA's competitors. So basically, it's a chip company. If you need high-end video game graphics, or if you need chips that can run big, giant AI algorithms in your data center, NVIDIA makes its money by selling you the chips that power those use cases.
Since we're on this topic of how NVIDIA makes money, we'll show you a revenue by market breakdown that NVIDIA provides here. And you can see what Nick was talking about, how much the data center growth has been over the last several quarters. And you can see that some of the markets have decreased in value, but data center keeps continuing to climb. So Nick, tell us more about the software component of NVIDIA. I know they speak a lot about full stack software and hardware. What does that exactly mean? And maybe we can just hear a little bit about the history of this.
Right. So, yeah, Jensen Huang talks about this a lot too. He'll mention this full stack. Specifically, when talking about AI, he says it's a full stack computing problem. This is a tech development term. You'll hear, especially in the software side of the business, developers talk about like a full stack software platform. That's basically like all of the software that you need to solve a problem. And it's called a stack because maybe you start with a base level of software that you don't see. It runs in the background, but it's absolutely necessary to run all of the other stacks of software on top of it. So that might be like the software that you and I actually interact with. So, for example, we're recording this podcast with some video recording software. The interface is ultimately what we use. We hit the record button, we hit the mute button, so on and so forth. That's the like the top of the stack, but underneath that, there are other software layers. But with AI, there's extra levels of complexity because you have to design at the hardware level. You have to oftentimes custom design at the hardware level, maybe a custom configuration based on what it is you want the AI to do. So NVIDIA has different chips and different configurations of chips to help companies with that. Then they also have these software libraries that help train the AI algorithm, that help with the inference once the AI algorithm is complete. So we talked a little bit about this in the video about Meta's AI chips, what training AI training is versus inference. AI training is learning for people. Training is maybe learning one time that the sky is blue, the color is blue, and then later on you can infer a lot of other things from that. So like if you see a car or you see a wall or some food that's also a similar color, you can infer that, okay, this is also blue. So NVIDIA has these libraries that help with both the training and the inference. And then increasingly in recent years, they also have some very specific pieces of software that you can actually subscribe to in a software as a service model that might do something very specific that businesses need. So it's a full stack problem, and NVIDIA is solving the problem for its customers at every level of that stack, from the base hardware design all the way to the end product.
So one of the use cases for all of this is generative AI, which we can think of that in Chat GPT, Google Bard, and there's massive data centers that have to compute all of this AI information in general, right? So why is this such a big deal for NVIDIA?
Yeah, so when Chat GPT went viral late in 2022, early 2023, it really, I think, opened the masses' eyes to the power of AI. Because let's face it, AI is not a new thing, right? Uh, Companies have been working on various types of AI for decades to do all sorts of things like analyze data or make recommendations. Let's say when you're doing like an internet search and the search engine comes up and populates a list of search results. There's AI algorithms that govern that. But generative AI kind of takes things to a new level, not just because it's a piece of AI that can be used by everybody. It's become that useful, but also because of the power behind it and its ability to possibly disrupt very large existing markets. And we're not talking about like blue collar jobs. I think in the past, technology was a disruptor of actual physical labor and physical work. Now with generative AI, there's this potential to disrupt white collar work. And so this disruption can be very, very widespread. Maybe there's like, if we think of an example, couple of examples here, a marketing company, and it hires a graphical design team. Suddenly, someone can just use one of these generative AI algorithms, like maybe Stable Diffusion, for example, uh, and just type in what they want an image to look like. And voila, you've got something that maybe it's not super original or unique because it's been trained off of some human work in the past. Nevertheless, you no longer have to go out and tell a graphical designer, hey, make me this image. In a few seconds, you have a piece of artwork to work with. So that's one example. In writing, this is something you and I have been making use of as well. In crafting, let's say, an outline for an article or a video on NVIDIA. You can ask the generative AI service to do that. Perhaps most powerful, though, is the ability for anyone to go write software with zero knowledge of code. Again, this is something you and I have used as well in creating, for example, like a discounted cash flow analysis calculator. If you want an app that does that. You can actually ask Google Bard or ChatGPT, hey, write me the code for an app that will calculate the fair value of a stock using the discounted cash flow methodology. No need to code it whatsoever. The thing spits out the code, and you can design the user interface and everything within some of these generative AI models. You talk about inflation the last couple of years being a problem for a lot of companies, especially wage inflation for maybe like software developers because there's not enough of them. And other knowledge workers, maybe there's just not enough talent out there. Generative AI can possibly help solve for that problem. And so suddenly, this proliferation of generative AI has set off this arms race where everybody wants an Nvidia chip and a custom AI model to solve their particular pain point. It's an absolutely revolutionary moment, not just in computing technology, but I think really an inflection point in the economy where suddenly a massive amount of money is flooding this brand new market.
Yeah, that's incredible. It's absolutely mind-blowing the potential of this. So do we have any idea like how big of a market this is? Like it's brand new, right? So what are we looking at here? How big of a market can this truly get?
Well, we have an idea of how big it is right now. The big question here is how big will it eventually be? And this is why Nvidia is such an expensive stock, because for its particular brand of chip and all the software tied to it, Nvidia is basically a monopoly. Um, Big tech has been kind of sleeping on this, or maybe it just simply illustrates how incredibly difficult it is to be good at designing chips. You can't just decide that you want to compete and disrupt a company like Nvidia. It doesn't work that way. At any rate, we do have some hints. So $11 billion in revenue in the next quarter, and possibly the next 3 quarters for the rest of 2023, calendar year 2023, Nvidia could be generating $11 billion or more per quarter. So that's a pretty good hint. And maybe just for a little bit of the sake of illustration here, what does that mean exactly? I have a chart pulled up here from our friends over at Main Street Data. Here's the quarterly breakdown of revenue from the last few years. At its previous peak in the first quarter of calendar year 2022, roughly a year ago, Nvidia's revenue was $8.3 billion. Of course, you see the dip since then because the whole semiconductor industry got hit by a pretty sizable downturn. But you can see here $11 billion in the next quarter and possibly higher in every quarter after that. Nearly like 40%, possibly 50% increase over the previous high point in quarterly revenue. In addition to that, profit margins are also going to start making brand new all-time highs. Adjusted gross profit margin on chips sold could be 70% or more going forward. Again, the previous high was about 68%, 69% at the previous peak in 2021 and early 2022. So there's a hint about how big the market is right now. Jensen Huang actually did say some other very interesting things. Just I think this is maybe for the sake of just illustrating where we're headed and why the market is so optimistic here. But basically, he said worldwide, data center infrastructure is worth about $1 trillion. Not per year, just in total, the actual value of data center infrastructure is about $1 trillion. That infrastructure, as it stands right now, gets refreshed about every 4 to 5 years. So the old chips maybe get ripped out, or maybe they get retired and relegated to some task that is no longer considered high performance computing or whatever, and then it gets refreshed with the newest, latest, and greatest chips. So roughly $1 trillion in infrastructure that needs refreshed every 4 or 5 years. Suddenly, with the dawn of generative AI, not only does that old infrastructure need updated, but the value of that infrastructure is now going up because chips needed to run generative AI are far more advanced. It comes with custom software that you need to run it. So they're more expensive. This is probably no longer a $1 trillion um, installed base. We're probably looking at something maybe closer to $2 trillion in total uh, data center installed base. I think probably within the next 5 to 10 years. Now, there's some limiting factors here. The world does not have enough resources available. Certainly, the semiconductor industry does not have enough manufacturing capacity to just rip out and replace $250 billion worth of infrastructure in each of the next 4 years for a total refresh. This is going to be a decade plus upgrade cycle. And Jensen Huang admitted that. But I think that kind of illustrates why the market is so impressed, not just with Nvidia's guidance for the next few quarters, but even beyond that, we're possibly hitting this new secular growth trend for data center infrastructure, and an incredible amount of chips are going to need to be purchased and installed in this fleet of global data centers.
I'm going to show a couple slides here from NVIDIA's GTC conference just a couple months ago about their cloud business models and some of their partners. And Nick, I wanted to ask you about this because I noticed that some of their partners are Google, Microsoft, Amazon Web Services, and we've talked about this before that some of these companies are developing their own in-house AI chips. What does this mean for NVIDIA?
Absolutely. Competition is always a risk, especially for a company with a high valuation like Nvidia. But for as long as I can remember, almost every single quarter on the earnings call, an analyst is going to ask management about competition. And Jensen Huang, for a long time, has lumped the competition into three buckets. So you have startups, uh, many of them that are well funded and have maybe novel ideas. Specifically, now we're talking about generative AI startups. Um, that is a potential threat, but as we talked about already, even if you're a well-funded startup, it takes many years to design not just the chip, but then also develop the library that runs on top of the chip, the software library on top of the chip. You have to go out and find someone to manufacture the chips for you, which is not cheap. So between development and then manufacturing, you've got at least a few $100 million into each of those categories: development and then manufacturing, hundreds of millions of dollars in each of those steps. Then you've got to market it, and then eventually, hopefully, scale up to a point where you start turning a profit after people start buying it. So, startups, yes, potentially a long-term threat. Nothing immediate, though. Second bucket in competition, other chip companies. So as we know, NVIDIA, it does basically have a monopoly on GPUs that power accelerated computing in the data center, specifically for AI training. We knew this was coming. The market should have known this was coming for years because NVIDIA has been talking about this. Wang has been calling them for years AI factories, basically data centers that manufacture AI algorithms and AI services. He was probably mentioning this in passing for years, knowing full well that companies like OpenAI were developing generative AI services like ChatGPT. NVIDIA is not alone in making chips for this, but as the monopoly on GPUs for generative AI. As far as competition from other chip designers, yes, I'm sure they are all working on ways to get a cut of this massive and still fast growing pie. But again, it's going to take time. And in the meanwhile, NVIDIA is not toothless. They also have chip designs that are now hitting production that compete with their competitors. So, for example, the Grace CPU and the Grace CPU superchip, which is basically two CPUs together. The CPU market currently in data centers, that's most of what data centers are today, is CPUs dominated by Intel and AMD. Well, Nvidia now has that as well. So we can't just say, well, some other chip company is going to just design something and instantly Nvidia has competition. Again, this is something long term. And then third, the third bucket, big tech that is also working on chips in house. Yes, they've also all been working on this for years. And if someone comes up with something that's a real actual game changer, that's why we own Synopsys and Cadence Design, right? Those two software companies, the CAD, basically for chips, they win no matter who wins the war. Be it Nvidia or another big tech giant, they're all going to use Cadence or Synopsys to design those chips. Great. So we own those two. But even big tech, this is kind of a funny thing. In recent months, especially, we see all of them. Microsoft, Google Cloud, Meta, AWS, the list goes on and on. They're buying billions of dollars worth of NVIDIA GPUs, and then simultaneously their media department is releasing these press releases geared at AI chips. Look at what we made. It's a stunt, and it makes perfect sense. Someone in the financial department is like, hey, to their friend in marketing, hey, we just signed a check worth like $1 billion to NVIDIA. Do we have anything remotely close to that can compete? Yeah, marketing department. Yeah, I think we can scrounge something up. We have been fiddling around with these chips that do AI inference for a while. They have to, even if it's not currently at this point actual competition for NVIDIA, they have to respond somehow because, as we've said before, NVIDIA has literally leveled the playing field, especially in cloud computing. All the big cloud providers, like the slide you just showed, Casey, Oracle Cloud, who in the world knew anything about Oracle Cloud until like the last year or two? Well, we do now because of thanks to NVIDIA hardware. Oracle can now compete with Microsoft, Azure, Amazon AWS, and Google Cloud. And it's all because of NVIDIA. So they've literally leveled the playing field. They've kind of reset technological development in the computing department. Big tech has to respond somehow, even though they may not actually be serious competition. They have to work on something, and they have to say that so that they don't kind of lose their edge when they go out and try to gain new customers and retain the customers they already have.
I guess that being said, the one key issue that we could foresee right now is actually that NVIDIA could not supply enough chips for all of the demand here. So that would leave the door open to some other competitors. Okay, now time to get down to the valuation and money aspect of this, Nick. So the stock price is currently around $389 per share, and it's trading for 200 times trailing 12-month earnings. Surely this is another risk for us here.
Absolutely. Valuation is 100% the other big risk that we see, besides just there not being enough supply out there, like you just mentioned. However, that being said, we have sort of a beef with this because there have been a ton of pundits out there saying sell, stay away, or sell for a very long time, not just the last 6 months, but even for years now. Get out of this. It's overpriced, without doing any actual analysis of the valuation based on actual cash flow potential going forward. So a couple of things to note here in that 200 times trailing 12-month earnings or 190 times trailing 12-month free cash flow. First of all, NVIDIA is lapping a very, very depressed 2022. The chip downturn was very severe last year. You can see from this revenue trend, video games and professional visualization. So that would be like professionals, graphics designers, people that work in media, video and content creation, et cetera, et cetera. Those two things tied specifically to the PC market got clobbered last year and lost a lot of money. Those two departments lost a lot of money. So Nvidia is lapping depressed earnings, thus the high valuation. Well, of course, you're going to have an expensive looking valuation if profitability was close to nil last year. Um, this is, I think, so obvious, but we still need to mention it anyways, because I think a lot of investors just don't understand this. Its stock is not expensive because of the past. A lot of things can be affected in valuation based on the past. You have to look at the future to determine whether something is expensive or cheap. Does that make sense? Your thoughts on this, Casey?
Yeah, I think that does make sense. Hindsight is 2020, right? But really what matters at this point is what the outlook is and where you think this company is going to go. So maybe you can just run through your discounted cash flow model and tell us what you found to be a fair value for this company, and does that justify the current price?
What's so? I think at this point you're going to provide what the discounted cash flow or DCF equation looks like, right?
Yes, I will put that up here for you to take a look at, and Nick can explain it. I have no idea what all these numbers and letters are.
You're very modest. You do know what it is. You've been hearing me chirp about it for years now. At any rate, to start with in this equation, we need to figure out what the current year cash flow is going to be. So currently it's calendar year 2023, which is NVIDIA's fiscal year 2024. It requires a little bit of number crunching because NVIDIA doesn't just come right out and tell us what their anticipated cash flow or earnings per share will be for the next year. But they certainly gave us a hint, and it's, again, quite impressive. So let's start with that. So to arrive at cash flow one, NVIDIA said their second quarter revenue should be at the midpoint $11 billion. The adjusted gross profit margin is going to be roughly 70%, again, at the midpoint. Then we need to subtract $1.9 billion in adjusted operating expense, minus $90 million for other expenses, and then minus the 14% expected tax rate for the quarter. That gives us an adjusted net income of roughly $4.9 billion. Or if you're looking for GAAP net income, using the figures NVIDIA provided for that, we're looking at about $4.3 billion in net income. I use adjusted net income though, because I think that will more closely reflect free cash flow this year. So $4.9 billion in adjusted net income expected just in the second quarter. Casey, let's look at maybe the Main Street data chart again so we can compare that to quarters past.
We have two charts here from Main Street data. Here's the cash flow overview. The previous peak for free cash flow was in this Q4 2021. You see the peak was $2.8 billion. And then looking at the net income for that same quarter, $3 billion.
Right. Now we're talking about net income and adjusted net income and probably free cash flow next quarter, well in excess of $4 billion, possibly closer to $5 billion. And then they did not provide specific guidance for Q3 and Q4, but on the earnings call, the indication was that the data center segment is going to continue to grow sequentially for the rest of the year, as well as, importantly, the video game segment and the professional visualization segment are back in sequential growth mode as they kind of lap depressed numbers from last year during the horrible, absolutely horrible year for the PC market. Of course, we know automotive, also a secular growth trend for the market. So to be conservative here, again, to get to cash flow number one, let's just say $4.9 billion in adjusted net income. divided by $2.49 billion in total shares outstanding at the end of the first quarter. And that assumes Nvidia is not going to repurchase any stock for the rest of this year. They do still have over $7 billion in stock they can repurchase. But let's just assume shares outstanding stay static at 2.49 billion. That gives us $1.97 in adjusted earnings per share for Q2. Let's multiply that by 3. Let's just assume $1.97 is what Nvidia earns in Q2, Q3, and Q4. And then we'll add the $1.09 adjusted earnings per share from Q1, the quarter they just finished. That gets us to $7 per share for cash flow number 1 in our DCF model. That's our starting point. Just if you're looking for like a simple PE ratio, yes, Nvidia trades for 200 times trailing 12-month earnings, but based on our full year expectation, which we think is a bit on the conservative side, Nvidia actually trades for like about 55 times adjusted earnings per share. 55 times, not 200. It's still an expensive stock. Yes, valuation is a huge risk, but it's not 200 times trailing 12-month earnings. I think that's an important point to keep in mind and to start with here.
Okay, back to our equation here. So I think we understand where you're getting the cash flow. Now, what is this 1 plus R1 in this chart?
Right. Okay. So we have to start with cash flow 1 as a starting point. It's the most critical part of a DCF model, and literally everything can go completely haywire and be absolutely utterly wrong if this first one is incorrect. And this is why we don't do a lot of DCF, and I spend a ton of time on price targets here because it's kind of folly. We think there's a lot of just error here, and in fact, you're never going to be right running this, but this is just for illustrative purposes here. So we have our cash flow 1. Let's call it $7 per share for the current year that we're in now. So the next part of the equation below that, you divide the cash flow by 1 plus R raised to the first power. So the first power, that's which year we're in. So each subsequent year that you do a cash flow estimate, so year 2, you would raise it to the second power, year 3 to the third power, and so on and so forth. The 1 plus R is, let's call it the weighted average cost of capital, or maybe just even more simple than that, let's call it a average rate of return. So let's say 10% is an average expected rate of return, because that's kind of generally speaking the long-term average for the S&P 500. And this discounts the cash flow. When you divide the CF above by the 1 plus R, or the expected rate of return, you're basically discounting the future cash flow, because you can't just pay fair value in today's dollars for future cash, because we have things like inflation, we have other market returns where we could maybe invest elsewhere and get a better rate of return, so on and so forth. So let's just call this 1 plus 0.1, and this 1 plus R in our cash flow 1 plus a 10% rate of return. And then we're going to do this into perpetuity here. And if you're interested in running this, just do a Google search for discounted cash flow calculator. And there are a ton of free to use calculators on the web that you can use to run your own DCF and see what the market is expecting from Nvidia to justify the currently $390 per share price. But for our analysis here, to kind of reverse engineer this, we're starting with $7 per share. We're going to be conservative and say earnings are going to grow 10% in the next year. Let's call it calendar year 2024. Because it looks like Nvidia might have significant momentum, that they'll continue to grow their data center and their PC business into 2024. So we're going to say 10% growth for 1 year before leveling off to 8% growth into perpetuity after that. And I lower it to 8%. Maybe that's too high, but at some point, remember, Nvidia's a cyclical business. They're going to have another downturn from something, but let's call it 8% for now. And then let's use a 10% discount rate, that 1 plus R. So let's go with that here. And that brings us to actually a fair value estimate of about 385, 390 bucks per share. Amazingly, despite that crazy looking valuation on Nvidia stock, it actually looks like it's fair valued using these assumptions. So, I think a lot of the dialogue out there is Nvidia is way overpriced, and maybe it is. Maybe they don't grow that quickly this year. Maybe they don't grow at all in 2024. But using these assumptions, it actually looks like the bar is not ridiculously excessively high at the moment for Nvidia stock. Maybe this thing is closer to fair value than we thought, given the new information that we have. The fact that Nvidia was like, hey, we've got $12 billion in extra revenue we're going to generate this year, and it's going to be at record profit margins. Maybe we've set a new floor for Nvidia that we need to use in our assumptions going forward.
With that being said, what are we doing with the stock in our portfolio? Is this a fair value for us, or will we be trimming some of our Nvidia, or are we thinking about adding to our portfolio with Nvidia?
So I think the viewers have all established that you're maybe the more aggressive investor out of the two of us. But I think you would probably raise an eyebrow if I said we need to buy more Nvidia. We are not buying right now. It's already our largest position and it keeps getting bigger, but nor are we trimming. We did trim a couple months ago. That was too soon, but based on our process and our portfolio, we needed to trim. We needed to take some off of the table. It wasn't the optimized outcome as far as total return goes, but we're playing the long game here, not the month to month investment return game. So we're not buying, but we're not selling anymore either. We're staying pat because I think Nvidia is now knocking on the door of a $1 trillion total market cap. I think the market is going to reward it. It's going to join the 1 trillion market cap club. It's going to join Apple. It's going to join Amazon, Microsoft, and it could continue to soar through that mark and keep getting bigger. I don't know where, because again, I think maybe just to reiterate here, this is a new market that has been created, and we don't know how big it's going to get. We don't know how much supply Nvidia can get out the door this year and next year. And we don't know at what point the market kind of cools off and, takes a breather before the next leg of growth, maybe 3 or 4 more years from now down the road. So I don't know at what point the market says, okay, we've priced in enough premium to Nvidia. So we'll just kind of continue to reevaluate here. But I think the stock does continue to go higher from here. It's going to probably soar through $400 a share if we're going to guess, right? I think you and I are in agreement. The market's going to push it over $400 a share, maybe closer to 500. Who knows? It's going to soar through a $1 trillion valuation. And then at some point, we're going to hit some extreme volatility unless Nvidia provides even more crazy upgrades to its financial guidance for the remainder of 2023, calendar year 2023. But we're just going to have to wait and see 3 more months from now what kind of further guidance they give us.
As you said, Nvidia is not a cheap stock, and it's not going to be a cheap stock for quite some time. But there are lots of great companies that are going to benefit from AI and the massive amount of chips that are needed for this industry and market. So some of the companies that you may have noticed that we have followed in the past and will be continuing to update you on, Marvell recently reported, and also Broadcom is coming up very, very soon in the next couple weeks. So we'll definitely get some data out to you for those 2 companies and why we also like these companies in the AI race. We've definitely used the term AI a lot recently in our videos, and it's not just because it gets clicks. It's being used, the term is being used all over the place.
Indeed, we have. We have both invoked the power of the word AI. Is it a bubble? No, I don't think so. This is the real deal. Interestingly, Casey, Nvidia, for years, this is one of our top companies for many years. We are very well acquainted with this business. I got to pal around at Nvidia headquarters for a day back in 2019. They've been at the forefront of multiple bubbles. Some of them have not stuck, like the cryptocurrency mining bubble did not stick. That crashed and never came back. But what about some of the other bubbles that are now just kind of ubiquitous parts of our lives that Nvidia still makes a lot of money off of? High-end video games. It's not just a PC thing anymore, but they're still making money off of that. That dovetailed into professional visualization. You could say that we're in a CGI bubble. When's the last time you went to the movies and didn't see an entire scene constructed from CGI? I can't remember the last time we went to the movies where there was no CGI in it. The self-driving car bubble, the cloud gaming bubble. Nvidia knows its way around bubbles, and they're going to be just fine. Just mind the risk, right? This is going to be a volatile stock. It's going to be cyclical. Because it's one of the world's preeminent research and development organizations, those bubbles are going to, Nvidia's cyclicality is going to revolve around some of these tech hype bubbles. It's just the name of the game for this company. But that certainly doesn't mean AI is a bubble. AI has been around for many, many, many years. And this particular iteration of it is most definitely a game changer for sure.
Okay, that'll do it for today's episode. Special episode today on Nvidia. Please make sure you stay tuned, come back for more, hit the subscribe button. We have a video coming out about Palo Alto Networks versus Fortinet, which we promised you last week. And then also we'll discuss Marvell Technologies' most recent earning report.
Maybe I'll just add this too. When we talk about Marvell, we've had multiple requests about Supermicro Computer, ticker SMCI. We'll weigh in with our thoughts on that too. Bonus edition when we talk about Marvell.
Don't forget to check out Main Street Data. We've been using their charts a lot in our videos, and they have a fantastic lineup of charts, transcripts, earnings reports, all of that on their website. Link is in the description so you can take a look at it. There's a 10% discount on a premium service if you use our link. So we will see you back here at Chip Stock Investor very soon. Hope you have a great day.